Well, the S&P 500 has been oscillating between no movement and a little bit of positive momentum, but it has been about 4 weeks in a row, if these gains hold, of gains. Yet we have not broken above fresh all-time high levels. Let's get a flavor of the market from Alan Nuckman, Chief Market Strategist at Agora Financial. Alan, thanks so much for being with us. Over those 4 weeks, you've seen a shift in terms of the sectors that have been outperforming. The best performers are those financials and energy sectors. Tech has been a bit of a laggard, and that has people bringing up, okay, is this the value trade over the growth trade? How are you looking at the most recent dynamics?
Well, I think it's very simple. I think it's the laggards. You know, the money flow went into some of the laggards, and they're playing catch-up. You've got to look at the performance of the tech sector in the last year. It's been, you know, extremely strong. So if you look at the indexes, compare tech to the S&P, which is up 20% in 2019, compared to the Dow, which is up 16%, you're starting to see them, you know, start to perform at the same levels. But like you said, it's back to back, and maybe back again weeks in a row of the S&P being positive. But more important than that is we're seeing higher highs each week and higher lows. That's something good to see for the bulls.
For the bulls, yes, but even they must be getting tired of hitting all-time highs that are basis points above the last all-time high, right? You must be looking for some kind of sustained breakout, because over the past year, 18 months, going from high to high, you really haven't made that much money.
Right, but what we've seen in history is we're in a over 10-year, decade-plus bull market here. What you've seen here in the last few years, every time the market sells off, it rallies the distance of that drop on the old top. So that gives us about a 10% move in the S&P on the upside once we see a rally. So we've seen that each and every time. Until we don't, that's just how the markets perform. It's a good measuring technique. And if you can look at the big macro picture, there are a lot of positives. We're seeing energy stocks start to perform, and they've been really kind of held back. That can add to the overall market, obviously. And looking at what's happening here with interest rates and this drive to the bottom around the world, that still encourages the choice into the equities markets. That hasn't changed, and until that dynamic changes, it's going to be up, and away for stocks, in my opinion.
Up, and away. What does that mean in terms of percentage gains from here?
Well, like I said, 10% is the next upside target if you look at the S&P. So we still have some great moves. To try and pick the top of this market has been a fool's errand for the past 10, 12 years now. Those people are dead, gone, ground up, crushed. There's driven over. There's no way to describe where the bears stand. Every time the bears get in a position where they think this is the end of the market, what happens? It snaps back and you see a squeeze. Now let's look at the VIX volatility. The fear factor has come all the way back down to the 13 level. That was the original breakout at the end of July. So all of that angst, all of that concern, all of that worry in the marketplace. And imagine, if I had said a couple years ago, listen, we're going to be in a severe trade war. We're going to have all of these issues around the world. And, the stock market's still going to be right at the highs. That doesn't make sense. So that shows the inherent strength of the equities market. And again, it comes down to the simple chase for yield, and this is where the yield is right now.
And what is the best play for investors? Is it to just hug the index and ride that 10% wave higher if that's what comes to fruition, or would you recommend the strategy that has been playing out over the past couple of weeks of trying to pick away at those underperformers, hoping to outperform the market from here?
Well, as a trader, I try and find, some of the diamonds in the rough, so to speak, and I look for stocks that haven't performed. And I think we've talked, I mentioned energy. So let's look at Exxon. Exxon's traded between 65 and 85, so it's a Dow dog. It's only up about 6%, which is 10% less than the index itself. I'm just giving this as an example. So I'm an options trader, so I look at some longer-term options, some January options, some in-the-money options as a stock substitution strategy. Instead of tying up my money with the stock itself, I can can get some great performance in the underlying option, even with a small bump in the underlying stock. So from a risk-reward standpoint as a trader, that's how I like to position myself. And there are a number of stocks that obviously haven't performed here in the last 6 months or the last year that I think from a trader's standpoint, they offer some good levels to lean on and see if they can have a little bit of a rubber band snapback and play with the rest of the market.
So I guess my question is, regardless of what you call it, whether it's picking the underperformers or going to a value trade, I guess my question is, why now will that strategy work when in the past it's been, if you stuck with the winners in tech, they just continued to win? What is it about the environment right now that you think is going to lend itself to a shift in which the underperformers will start to outperform?
Well, there's two ways to trade. You trade with momentum or you trade with value. So it just depends on your personality. I think either attack can be profitable. It's just I have a hard time sometimes buying a stock that's had a big exponential move. If you look at something like Roku went absolutely straight up. I don't know what the reason's going to be, but at some point there's going to be some profit taking or there's going to be a bump and backs it off. So you want to use that to your advantage and you look at that as maybe a buying opportunity, but it's hard for me sometimes to jump on the stocks that have already had huge moves. That's just my personality. I like to look longer term and look for value, but use options as a way to get a great performance with a modest move in the underlying stock.
All right, to your point on that, Roku, it's down 25% in the past month alone after running up to near all-time high levels.
Right.
So I guess momentum can cut two ways very quickly. Alan, thank you so much for joining us with your insights. That's Alan Neckman, Chief Market Strategist at Agora Finance.